Hi guys, Jacob here. The stock we will analyze today is none other than Alibaba. The reason why we will analyze Alibaba is because it's the perfect time to do it. Hitting a rock bottom of $180 yesterday and hovering around 190 today is the perfect moment to discuss if it's a good buy or a pass Alibaba. I will increase my position in Alibaba and I will explain further in the video why. Let's look at the first articles. We can read in the article, China is currently the United States' third largest goods trading partner with 558 billion in total two-way goods traded during 2019. Goods exports totaled 106 billion, goods imported totaled 451 billion. The US goods trade deficit with China was 345 billion in 2019. Why did I take the numbers from 2019? Because of those of 2020 are less important because of whatever happened in 2020, like we all know. Next up, we can see the clear path of Alibaba in the last 1.5 years in this graph. We can see the rock bottom it hit in March 2020 and the slow rise back to 329 in October. After October, it dropped again from 329 to 210. The reason for this big drop was because the CEO went missing at that time, Jack Ma. We didn't know where he was and there was a lot of speculation. Did the CCP get to him or whatever happened with him? But we can't say for sure. So anyway, the stock went back up from 210 to 275 and it dropped again until now. We are around 180, 190 and we even hit 170-ish. So the drop is very significant this time, and the reason for this drop is because of the CCP. Now I do believe Alibaba is very undervalued as a company and as a stock. They keep improving their fundamentals and are the only company to battle with Amazon in the future. The only reason why its market cap is valued lower than Amazon is because of the lower revenues they produce and the negative sentiment towards Chinese stocks and the CCP. This too will clear up as the United States and China need each other's economic activity, as I said before. Let's make something clear, is that Baba hasn't changed their fundamentals and this stock dropping is a blessing in disguise. So next up we can look at the last 4 quarters, not only the 4 quarters, since 2015 we can clearly see that Baba has been increasing their revenue as well as their earnings minus the last quarter, which is expected due to the lasting effects of the disease we had since 2020 March. Next up, when we look at one of the most important metrics, the cash flow of Alibaba, we can see that they have enough cash in hand to sustain and increase their expenses for all kinds of purposes like operations or acquisitions. We can see that they have increased their free cash flow from 59 billion yuan to 101 billion yuan to 135 billion yuan to 231 billion yuan in the last trailing 12 months. 231 billion yuan converted to US dollars is around 35 billion USD. So they clearly have enough free cash flow. When we look at the PE ratio of Baba, we can see that it's hovering right around 20 to 21 right now, and that right before March 2020, when the pandemic hit, we had a PE ratio of around 19. Considering the future growth and the growth rate of Baba, buying even under $200 a share is considered very cheap right now. I do see Alibaba's market cap growing to a minimum of $1 trillion by the end of 2022 as they are innovating and growing more internationally. This means an upside of at least 100% if you buy now at the prices of around $190 per share. While the market cap is just over 500 billion, Alibaba has a lot of growth potential. Most notably, when we look at the Chinese government, we can see that they have the second biggest economy in the world, right behind the US. But they are catching up right now. When we look at the growth percentage of GDP, we see that China is growing at a faster rate than the US is. This is also why I will be keeping buying Alibaba in case the stock price goes down some more, because everything points down to a long-term winner. I want to thank you guys for watching the video. I would really appreciate it if you guys would subscribe, like and comment on my video if you've got your own opinion or have questions to ask for me. But I want to end the video with a quote from the intelligent investor Benjamin Graham, where he says, "Buy when most people, including experts, are pessimistic and sell when they are actively optimistic."